We usually don't think much about the money we carry in our pockets. It's there, we spend it, it's gone. But when you stop and notice this, your perspective starts to change. Every piece of money you hold is in fact someone else's debt. This is not a metaphor. This is literally how the system works. If you have money in your pocket, it means that somewhere in the system, someone is in debt. A mortgage, a corporate loan, government-issued bonds. The entire global economy is built exactly on this. Money is not a pure value as we tend to think of it. It is an obligation. And yet, what's strange is this. Almost no one asks, why is it this way? Why does money have to be born from debt? Couldn't there be another way? In fact, there has been. But before getting there, we first need to truly understand how today's system works. Most of us imagine banks like this. People deposit their money and banks lend that money to those who need it, just intermediaries. It sounds reasonable, but in reality things don't work that way. Today, when banks issue loans, they don't take that money from someone else and give it to you. They create new money. When you take out a loan of 100,000 lira to buy a house, the bank creates that money by pressing a few keys on a computer. Yesterday, it didn't exist. Today, it does. With one condition, it must be paid back with interest. So a very large portion of the money in the system is born as debt from the very beginning. Credit cards, personal loans, corporate debt, all of it works this way. Governments are no different. When tax revenues aren't enough, they borrow. They issue bonds and say, we'll pay this back with interest later. That money enters the economy, but again as debt. And that debt isn't paid by individuals alone. It's paid by society as a whole. Here's the core issue. This system can only survive if debt keeps growing. If people stop borrowing, money shrinks. If governments stop borrowing, markets tighten. That's why central banks panic, interest rates are cut, and borrowing is encouraged. The system constantly needs more. We're already living with the consequences. There's inflation because new money is continuously created. There's inequality because lenders earn interest while borrowers pay it. And for most people, real economic comfort almost never arrives. At this point, one might think, so money has always worked this way. But no, not at all. Throughout history, there have been societies that did not see money as nothing more than debt. Thousands of years ago in Mesopotamia, when debts began to undermine society, kings wiped them out entirely. This wasn't generosity, it was a way to preserve order. In medieval England, wooden tally sticks functioned as money for centuries. There was no interest, no complex banking system. It was simple, but it worked. During the American Civil War, the U.S. government issued debt-free money. The state created money directly. It worked for a time, but after the war, financial interests shut it down. Because debt money was profitable. Debt-free money was not. There are more recent examples as well, like the WIR system in Switzerland. Small businesses have been trading for decades using an interest-free, trust-based system. It has remained resilient even during major crises. Cryptocurrencies are also part of this discussion. Bitcoin isn't perfect, far from it. It has many problems. But it proved one thing, money doesn't have to be born from debt. Today, even governments are searching for new paths. Central bank digital currencies are being discussed. These could reduce the power of banks, but they also carry the risk of increasing state control. Every alternative brings a new balance to consider. All of these examples share one common message. Money is not a law of nature. It is a design. The debt-based system dominates not because it is the most just, but because it is the most profitable. Banks earn interest, governments buy time through borrowing, and the burden falls on the majority. And right now this system is under strain. Global debt is at record levels. People can't escape debt, and the proposed solution is always the same, more debt. But history tells us this, no system lasts forever, especially those that keep people permanently in debt. So maybe what we need isn't to immediately find the perfect system, but first to remember this. Other systems are possible. Money can be designed differently. And even asking these questions matters. Because money is not destiny, it's a tool, and tools can be changed.